All right, on the SPYs, after a couple of days of selling, we settled in. There was a bid at 263, and I haven't changed anything. This is kind of the markup from yesterday. So you can see that it was sold kind of at the bottom of the band here. We had this potential selling pressure area. So it was sold here in the morning at 263.5, sold here in the afternoon. Looks like earlier in the pre-market was above, but it rejected again. So I guess the sellers are in control. I mean, basically it came down, it's resting now, but with a little gap up, it immediately came back inside of this band. So I would say sellers are in control unless it starts to hold above 264 short term. And then IWM is actually a little bit weaker. So I mean, you can see that downtrend very cleanly continued yesterday. And I don't know if it was just people got spooked by the size of this down move or what the deal is, but it maintained a pretty steep downtrend yesterday. It's moved outside of that now, so we'll see. But 150.50 was big for, I don't know, from October to November. Spent a month failing to break above that. So, you know, if we get a little bit of buying today, we get up here and then we're back below. That's interesting to me. Qs, we noted the 152 level yesterday. It bounced off it. I don't really think there's much to say other than that. It's marked up exactly as it was for yesterday's meeting. Right on the open, wicked down. First drive took it up to kind of where it broke down the prior day's afternoon. Came in, made a higher low, and then was bought, and being bought a little bit this morning, but looks like sold off with the SPYs as well. So just trying to make some higher lows there. The first stock to look at is DG. So I started talking about this idea probably a couple of years ago with some of these retailers that are kind of the low end price points to lower, I don't even know what the word is, consumers that are more dollar conscious, so Dollar General. But anyway, they seem to be less impacted by Amazon than other stores. Now, here's kind of the multi-year uptrend. So it's started back in 2011-12, went from 30 to the 90s, tripled, and then after that huge move, like happens many times, it gapped lower and then consolidated for a while. But now, after a couple of years of consolidation, it's back up at the highs. And so the numbers, I think, so they got a very small beat on revenue, but the thing that caught my attention was the same-store sales increase. It was actually above 4%. I put 4 because they got a little extra sales from the hurricane, people, buying stuff as the hurricanes were coming in the fall. But same-store sales growth, 4% is really solid. It shows you they're doing something right. And I don't know if it's enough for it to maintain it up here at the all-time high, but it certainly, the volume's light. It's 100,000 shares pre-market, so that's what is that? Less than 4% of its average daily volume. We want to see what it's done recently coming into earnings. How much has it run up coming into earnings? And the answer is it started at 80, then it broke out from 84, and then it held here at 88 for a while, then it broke out from 88. So a lot of people buying into the earnings number, and it's in fact up 20% from where the move started from. So I would think you'd see some selling pressure here in this area. So far in the pre-market, it's held the 95 bid, and it's pushing against this 96. But so what I would look for right on the open is a pop. It's holding below 96, and then does it hold below 95? If it does, we don't really have any support until 90. I'm not saying it's going to just go like that, but if it fails here and below 95, you'd play for a move probably down to 93, 92, and then kind of take it from there. No different than yesterday. What I did in Home Depot was you take the $2 to $3 down move right on the open, because you don't know, is it going to consolidate and continue to the downside, or is it going to consolidate and maybe break back above key levels? And so in the case of Home Depot, which we'll get to in a few minutes, that actually went up a bit, although it's still below 82. So that's my thought there. It normally trades 2.7 million on a big day like this. It's probably not going to do, I don't think it's going to do 10 million shares, but it could easily do, actually, why is it saying its average volume? I think it could do between 5 and 8 million shares. So it's going to be very liquid. The next one is MRNS, which could easily have gone third, but I didn't put Sage on the sheet because I think the spread can end up being $1 or more. Normally when Sage gaps up on news, MRNS does as well. I guess they're probably testing similar type drugs. Here's the daily. So let's go back. Actually, I wasn't right. After 8, I said no resistance. Actually, 10 is resistance after 8. Let's update that. So here's the deal. It was beaten down that dollar stock, and it looks like, you know, as goes Sage, as goes MRNS. Question is, what is it going to do here at $8? It's already it hasn't come off much. Come off about 40 cents. So we operate under the assumption that it could test this longer term resistance after the open and maybe even spike through it. I put on some levels there to look at, potentially buy it right on the open or even in the pre-market. So right now in the pre-market, we can see sellers have taken control. Let's start at the bottom here. It's on the 750. What do we have on the sheet? 730 to 750. So I thought if you got a flush into this area here on the open, that would be the spot to look at it. Your confirmation would be a move, let's say back above 765. You buy in here, it gets back above here. You play it for a move to here, and then say the opposite of what we just talked about in DJ. We don't know if it's going to sustain up here and go to the next resistance area or actually fail like it did in the pre-market. Sharp just got shorted, so that's his view. Lulu. So Lulu has been a favorite one of mine for years. Stock. Let's look at the daily. Got beaten down a few years ago into the 30s, where it was a really good long-term buy. It was a long. I got to go back. When was it down there? Well, yeah, 3 years ago. So if they beat it down to the 30s, it came all the way back up to $80. And it looks like it's heading back to 80 to me now, clearly. So here was your higher low. Here was your higher low again. And it was being bought in the high 50s for a while. That was your chance to get in for a longer term. It's gapping. The bid right now is 73. So it's actually above this high. This is probably an earnings report right here. I guess 4 quarters ago. So this was December of last year. It had gapped up on good earnings to 72.5, and they sold it pretty hard. We'll see this time, does it actually close above 72.5 today and support the idea? Well, next resistance is probably 76. Did I put that on the sheet? Yep. I mean, to me, like if I can get a flush on the open down to 72 to 72.5, I would look at buying it here. For a move through the pre-market high, target 75, 76. That's how I'm thinking about it right now. I think there's some people still probably leaning the wrong way on this. I don't know if Goldman had downgraded a while ago. Morgan, I think. I'm not sure if those guys had ever upgraded it. So get some people leaning the wrong way. You might get some more. I saw some upgrades this morning. You might get some more upgrades tomorrow. TLRD. So TLRD is a symbol change. This used to be Men's Warehouse, and then they merged with that other suit company. I forget. I think it's maybe Men's Discount Warehouse, maybe. Actually, I just said Men's Warehouse. Moe's. I forget who they merged with. But anyway, they changed their ticker and their name when they did that. The interesting thing to me about this that caught my eye was they said their effective tax rate was 33%. And we know that the corporate rate just lowered in this bill that's going through Congress to 20%. So it kind of caught my attention. So this is a beaten down. I mean, it was a $60 stock. Obviously, they had a lot of trouble. It went down to $10 and tested $10 or $12 there, $10 again. And since it's been down at 10, it's been as high as 28. You can see right here. So what did I put on the sheet? 20, and then, so I guess my thought was when I saw that how high their tax rate was, and I know how analysts think, and they'll go to their clients and say, hey, these guys are paying high tax. That gets knocked down. You could easily see the stock going back up to $30. So this area here, but the next resistance is 22.80, above 20, on this gap down on earnings here from March of this year. So it tends to be a little bit of a wild stock for such a low price stock. It did touch 20 already on the initial reaction in the after hours. I think as long as it doesn't really get much below 19, I'd be looking for it to catch a bid and see what happens up here in the 20 area. Normally trades 1 million shares, could easily trade 3 to 5 million shares today. Pretty good liquidity. Joseph A. Bank, thank you. Men's Warehouse and Joseph A. Bank. Conjob, which I like to affectionately call this stock. So this is another one. Another thing that a lot of people seem to not like to buy from Amazon or online is expensive electronics. They like to go, check it out, feel it, see it, be able to go to the store. And that's why obviously Best Buy has done really well the last 3 or 4 years. And the same thing with Conjob, CONN. So it hasn't come back though the way that Best Buy obviously has. But it did break out of its long-term downtrend. And it's gapping to 34 today, which brings it almost to this resistance here. Do we have that on the sheet, 35? Yes. We actually have 34 in the resistance as well, I guess. Maybe this day that it gapped up. So, and what did it do coming into earnings? It was $28. People had bought it. It pulled in, and it was right back up at resistance. So, and I guess over the last few months, it was bid up from actually quite a bit, 20 to 32. So, it is actually a large move coming into earnings. So, let's be wary of this gap up here and see if it actually can come back down into this 32. It's about $2 below where it is now in the pre-market. We have no volume to speak of. It's going to be a thinner. There's a reason why it was actually the last name. It only trades 400,000 shares, but it's worth keeping an eye on. Maybe have an alert up at 34.80, 34.90. Let's see if it pops there on the open. Home Depot, which I referenced earlier, shorted into the pop on the open. It actually, I didn't really think it could get much above 181. It did touch 182 here. Almost had a gap fill right in the open. And then very quickly, they started to sell it around 188, 140. And then the second down leg is where I covered most of it when it flushed through 180, made another lower high, and then covered 90% of it into 179. And then it got, I think, stopped out on this move right here, back above 179.70 or something. It did have a clean reversal. I wasn't really watching it. When it came back down below 180, I think you very justifiably could have said, hey, it's below 180 again, it's consolidating. It could break down and go to the pre-market lows, but it got back above 180 and then below. So this is really kind of messy. Eventually it did get back up to the morning resistance right here and failed there and came back down and closed below 181. So looking at it today, I'd have alerts here at 180, 180, 140, 180, 150, and 182 are the potential resistance areas. I still think on a daily it could be topping out, even though they did a nice job of stepping in and keeping it from breaking down yesterday. Sometimes a stock this strong, the buyers will come in and will kind of work its way and fail in this area, and eventually you'll see some closes below 180, and then you get that quick move back down to 172 to 174, something like that. DVA. So DVA was bought on the open yesterday. They got that cash from selling some of their units to focus on their core business. And I guess it was accumulated for a while in the open. Looked like it was being bought here at 67, broke below. So I'm sure some people probably shorted it. Went down 30 cents, and then, they accumulated again for another hour. So clearly, this was worth keeping an eye on if it got above 67.60, which it did here and led to a $2 up move. So, I mean, this is a good example if you're looking for what it looks like when there's somebody buying in a very methodical manner. Right here, comes back being bought again, and when it breaks to the upside and it holds very cleanly above the morning high, that's right there. And then you can see just very tight price ranges. It's just being very gradually accumulated for, and you can just see higher accumulation, higher accumulation, higher accumulation. I don't know if those buyers are going to be here today, but 70 was the resistance level we had on it. Almost got to that target in the after hours. So if for some reason it had a quick drop out on the open, and you could pick some up at 68.50, 68.60, that would be probably a pretty nice buy there. Again, 68, move to 70. And then CVS, I just wanted to throw this on here. I know the other day when it got sold aggressively, it had bottomed close to 70. It's had a day of rest. You know, they were stepping down a little bit still, but it's holding here. So you can see this was the low from day one. Yesterday in the open, it touched it. In the afternoon, it touched it. So, and it's being bought here in front, clearly being bought here in front of 70. And at the end of the day, the buyers started to step up a little bit. So this downtrend from 72.5 is broken. So we can look for it now to go back up to 72.5 and maybe even 74. So that was worth it. Obviously, Bitcoin is going crazy. I think it's 15,000 this morning or something. Our guys on our desk have done a really nice job of making money in that Bitcoin trust, considering I think the first trade we made in on OTC was shorting it when Bitcoin was at 5,000. So it's tripled in the last month or whatever. One thing I'll tell you about that, there's going to be a lot of opportunity in that for a while. The futures are coming out in a couple weeks or a week, I think maybe Monday. And if there's going to be some ancillary moves in things, stocks that say, oh, we're accepting Bitcoin for payment, oh, we're doing something in blockchain, this is a really good sign. I mean, last month was a record month for the desk, save for the crash in 2015 where the market moved, the big caps moved 20-25% in about 15 minutes. But other than that, last month really was the best month on the desk. And in large part, not only with low price stocks moving all over the place, but Bitcoin related stuff. So I think this bodes well for the next 3 to 6 months, Q1 of next year. So a good time to learn, to see what things can really do when things get crazy, and understand when things change and go back to more normalcy. That can be a tough transition.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.